Something that concerns me a lot is the idea that we would even look like China in any way. So can I have your commitment that as long as you're the chairman of the Federal Reserve System, that we will never have a central bank digital currency?
Yes.
Thank you for that. I think that's extremely important. It makes me very happy to hear you say that.
So as the vast majority of Americans are finally waking up and smelling the coffee about what's been going on in the government, specifically with the Federal Reserve, now that we got guys like Tom Emmer serving as the vice chair of the subcommittee on digital assets, financial technology, and artificial intelligence, we have some powerful clips to play for you guys today about the banning of central banking digital currencies. Also, a former World Bank president sounding the alarm to expose the Federal Reserve, and a federal judge ruling that Donald Trump does in fact have constitutional authority to freeze or limit certain federal funding. But the real question is this: with the banning of central banking digital currencies, how will that affect Ripple and XRP? Because as you guys already know, Ripple's been working on their CBDC pilot programs with central banks around the globe for the last few years. So does this completely kill Ripple as a business? How will this affect XRP's price? So if you stick all the way to the end of this video, I'm going to get into the XRP to the US dollar price chart and the most likely scenario to happen next, along with what Brad Garlinghouse is saying about institutional adoption with XRP ETFs and what the Federal Reserve is about to do March 10th that is going to completely change everything for crypto in the USA. So if you guys hold XRP or you hold any altcoins, then comment 777 if you're feeling blessed. If you're feeling bullish, you're going to love this video. As always, let's run it. All right, bull runners, welcome back to the channel. So if XRP hits $5 before March 1st, we're giving away 100 XRP to one person who likes this post on Twitter and is following us. I'll leave a link in the description below to BULLRUNNERS HQ. We have about 9,694 followers. Only 319 people have liked this post, so you still have a high chance of winning if XRP hits $5, so check that out. We are posting on Twitter every single day, several times per day, with additional news on top of what you guys are getting when you subscribe to this channel. And it doesn't cost you a dime. So if you love making money, if you love crypto, then consider subscribing at the end of this video. Look at the crypto market over the past 24 hours. We're seeing a lot of projects, even PancakeSwap up 38%. And the vast majority of the market is up anywhere from 5 to 10%, with the markets responding positively to Jerome Powell testifying. Look at what he just said recently.
Chairman Powell, you are the only bipartisan person or thing left in Washington. You were appointed by Obama. Trump gave you a promotion. Biden reappointed you. And you are the only Biden appointee not to hear the words, "You're fired," from our president. So I hope we listen to what you have to say, because you're the only person that I can identify in Washington that has support on both sides of the aisle.
With that spread of an expansion of crypto, and the president is 100% behind it. He just started his own meme coin. He's making a lot of money off of that, which is another issue. My concern is that the spread of an expansion of crypto will infect the traditional banking system, because it's a volatile, speculative asset, and we've seen some very sudden disasters with crypto. I'm just wondering, are there any backstops that we can use, any firewalls that we can put in place that might insulate the traditional banking system, you know, because they have access to the discount window and they're FDIC insured, so there may be, you know, second order impacts if we have a collapse of a major crypto issuer. Are there any extra things that we can do to protect the traditional banking system?
Yes. So first, I would say there are really two things that are happening. One is banks are serving crypto customers, and we don't want to get in the way of banks serving perfectly legal customers as long as they understand the risks and that sort of thing. We don't want to single out any particular.
Are you speaking to custody?
Well, custody is more. The second thing is undertaking activities on their own, right? And in that case, I do think it's appropriate to you know, as usual, as bank supervisors, make sure that we understand and banks understand the risks that are involved in the activity that they're taking inside an insured depository. On the other hand, you don't want to go too far. You know, I think there were a bunch of disasters, as we all remember. And, we don't want to, and we were reacting to some extent to those. You don't want to go so far as to, overplay your hand on that. So I think we need to be mindful that many of these activities can very well be done inside of banks, and custody may well be one of them. In fact, in Fed-regulated banks, there are lots of crypto activities happening now. They've just happened under a framework where we made sure that the bank understood and we understood exactly what they're doing.
So not only did Jerome Powell commit to never having a central bank digital currency, but on top of that, saying they don't want to get in the way of banks serving perfectly legal crypto companies here in the USA. This is a massive deal because in order to get into crypto and to get out of crypto, you have on-ramps and off-ramps. And the most common on-ramps are like Coinbase, Crypto.com, Kraken, Poloniex, and other big centralized exchanges. So when banks have the ability to custody crypto and to on-ramp you right directly in like your Wells Fargo or your Chase Bank account, which cryptocurrencies do you guys think that they're going to have back there? They're going to have the compliant ones, they're going to have the legal ones, the ones that are the large market cap projects. This just in, a federal judge has ruled that Trump does in fact have constitutional authority to freeze or limit certain federal funding. This means the Trump White House can withhold funding without the district court's prior approval.
Essentially, the court is confirming what the Trump administration has maintained and what common sense can project, which is that within the confines of regulatory and normal authority, of course, you can do what you want with your own money, and you don't need a court's approval to do so.
Now, the reason why this matters and the reason why you need to pay attention is because federal funding and national debt and the amount of money that they're using for the most ridiculous things you've ever seen in your life is out of control. Anyone find this else deeply disturbing? Even with the Doge numbers, Department of Government Efficiency providing a glimmer of hope. With the Doge clock right here on the lower right, then we see U.S. federal spending. The actual amount is out of control. And so this leads me to this right here. A former World Bank president has sounded the alarm, revealing that the Federal Reserve has lost over $1 trillion and counting, turning it into nothing more than a massive hedge fund for the rich and powerful.
Yeah, it's worrisome. The Fed basically has become now just a giant hedge fund. It's lost $1 trillion, and counting. It's going to be a gigantic loss. What it does is borrows money at 5.4% from banks and then dumps it into government bonds. So think what that trade does. That causes the government to think that it's better off than it is. And so that encouraged the government to be short when rates were zero. So why did the government borrow so much in T-bills? Well, because the Fed was buying the bonds and it made it look like yields were going to stay low for remember the low for long phrase. So we've got these multiple problems that are going on, and it endangers the dollar. So that's the basic case.
Instead of the Fed having such large balances, wouldn't the private sector be starting businesses and risking capital and bringing returns and adding to growth? Wouldn't all that money be better if it wasn't with the Fed?
That's right. And we're depending on private equity. So as the banks get squeezed out, because they're lending so much to the Fed, it's literally a floating rate loan from banks to the Federal Reserve so it can buy government bonds. So if that were freed up, that would allow the banks to at least consider a small business loan, an inventory loan, the kinds of things that help the economy grow. And this is on a global basis. It's not just the Fed. It's all the major central banks doing the same thing, meaning taking money from the economy in order to buy government bonds. We need to be clear on that. I heard the previous segment, they talk about money printing. There isn't any money printing on it. It's just money borrowing, and they pay top dollar for it. The Fed pays 5.4 to banks and 5.3 to money market funds, so to the Fidelity and Vanguard and so on.
So rather than just sitting here complaining about how much money the Federal Reserve has been wasting, there is a way that you can benefit from this. Hey, bull runners, if you want more money to invest in the crypto market, did you know that there's billions of dollars in federal cash for businesses that lost revenue and struggled to pay their W-2 employees due to the 2020 to 2021 government shutdown that caused massive supply chain issues? So if you have or any businesses that have W-2 employees, you could qualify for up to $26,000 per employee with no maximum limit through the Federal Employee Retention Credit Program when you click the link in the description of this video. Now, this isn't a loan. It's an IRS cash refund, and businesses have been getting back hundreds of thousands of dollars through this over the last few years. So to see if you qualify, all you need to do is click the link in the description below this video right now to schedule a free consultation with a dedicated ERC expert. But you have to act fast because the deadline to apply and share with as many businesses as possible is April 15th this year. And you can also sign up as an affiliate below, share with businesses that have W-2 employees, and earn 2% on their refunds. All they do is they simply click your link, they schedule a consultation before April 15th, and they will see how much they qualify to get back. So this is a great way to get money back in your pocket to invest in the crypto market before the next major breakout. And most businesses have missed out on this credit because the ERC qualifications have changed 3 times over the years. So if you were told in the past that you didn't qualify for this, there's actually a chance now that you do qualify. So click the link below, schedule a free consultation today, and let's help you get some money back in your pocket this bull run. And if you know any businesses that have W-2 employees, sign up as an affiliate right now through the link below. Share your link with as many businesses as possible before April 15th, and let's get you paid. So as the Federal Reserve comes out in their next FOMC meeting, March 18th through the 19th, and discuss what they're going to do with interest rates, we can see that they kept interest rates the exact same from the last meeting, and the effect that this has had on the market, well, is actually really good for the unemployment rate. It went down from 4.2 to 4.1 in December to then 4.0 in January. And so rather than it ticking up and spooking everybody, Jerome Powell said they were trying to keep it underneath, I believe it's 4.4% to prevent a recession from happening a lot sooner. A low unemployment rate just means high employment in America, which is actually great news for the crypto market. Plus, if we look at the M2 chart, since all the way back in late 2023, going into 2024, we can see global liquidity expanding. So sitting right here at about 21,000, well, the higher is 21,722. We're at 21,533. So we have actually seen a very close correlation between M2, which consists of M1 plus savings deposits, small denomination time deposits. We also have balances in retail money market funds, which basically just tracks global liquidity expanding or contracting. And if we look at it very, very closely, we can see how correlated it is to the price of Bitcoin, where it looks like global M2 in this chart, according to Raoul Pal, has a 10-week lead. And also the GMI Total Global Liquidity Index versus Bitcoin as well too. We saw this breakout here in September and October of 2024 for global liquidity when Bitcoin's price was right here around $60,000. And of course we broke all the way up here past $110,000, and now we're just consolidating below the all-time high. Another major thing that we need to look at is the Fed's balance sheet, because over the past couple years, since 2022, the Fed has been tightening on their balance sheet. Other than this little blip when they had to save the Silicon Valley Bank collapse, well, then we can see the Fed just keeps tightening down. And for the perfect storm of opportunity, eventually this is going to reverse back around. So that's why we're going to be watching and covering on the channel and on Twitter as well too, what Jerome Powell is saying in his FOMC speeches for when the Fed is going to start adding to their balance sheet again. So before we get into the banning of central banking digital currencies, major crypto policies that are coming, how this affects Ripple and XRP, let's take a macro look at Total 3, which is the crypto total market cap excluding Bitcoin. And if we were to look from the bear market bottom all the way over here in January of 2023, well, that wick to the downside with the tariff news that Trump announced, on Canada, dropped the markets down to backtest the previous resistance from March as support. And it was about 766 days from the bottom of the market. Now on the left-hand side of the screen, you guys can see the bottom of the market, of the bear market in December of 2018. Well, 739 days in to, this whole recovery after COVID and the bull market kicking off before we reached the all-time high, we saw a wick down back to backtest a previous range high as support that was resistance. And so, yes, we are about 27 days extended for this back test. But as you know, bull markets and bear markets don't go exactly to the exact day in terms of time frame of how long that they take. Case in point is if we measure from the high right here on the 5th of January of 2018 at the peak of that bull run to the bear market bottom, it took 344 days to go from top to bottom. Now on the right hand side of the screen, if we measure from the top of the market right here on the 10th of November of 2021 to the bear market bottom, it took 415 days. So another 2 to 3 months longer of a bear market than the 2018 bear market. So I just find this very interesting how this plays out. And it'll be crazy to see what happens over the next few weeks as we go into March for the next FOMC meeting, March 18th and 19th, because of what's coming March 10th for the FedWire Fund Service, which I'm going to get to in a little bit. That's extremely important to pay attention to. But first, check this out. There's a very interesting stat here. New whales are dominating this cycle versus old whales, and this means that fresh capital is flooding into Bitcoin, likely from increased institutional and retail interest. Because as you can see in orange here, these are old whale wallets, and purple is new whales. So, of course, with Bitcoin ETFs getting approved, in $90 billion Van Eck saying Bitcoin reserve bills could drive states to buy $23 billion in Bitcoin, plus Trump working on the Bitcoin strategic reserve, I don't think you're bullish enough on the markets right now. Plus, in my video yesterday, talking about XRP to not be used by the BRICS nations, this happening instead, it got about 30,000 views. If you guys haven't checked that out, watch it after this video for context, but it was all about this post that Wall Street Bulls made saying XRP is not a bridge currency, which was a very bold claim to make because of what Brad Garlinghouse said here. In order to convert crypto to fiat exchanges, rely on banking partners, they could lose their licenses if someone on the OFAC list is able to slip through because of stringent KYC AML policies being in place to avoid this. And RippleNet has been committed to not working with sanctioned banks or countries that are on this OFAC list. Now, OFAC is simply the Office of Foreign Assets Control, and it's an agency of the U.S. Department of Treasury that administers and enforces economic and trade sanctions. And OFAC acts under presidential national emergency powers as well as authority granted by specific legislation to impose controls on transactions and to freeze assets under U.S. jurisdiction. And their mission is to prevent entities or individuals from using the U.S. financial system to fund activities that threaten U.S. interests or violate U.S. policy. Now, as of the knowledge right now, according to artificial intelligence, the countries that have been subject to OFAC sanctions are Cuba, Iran, North Korea, Syria, Venezuela. Additionally, Russia is on here as well too. So the reason why this matters is because in this video, it says the BRICS nations, and that includes Brazil, Russia, India, China, South Africa, and Saudi Arabia. Now, as you guys know, Ripple is doing business over in Brazil and also Saudi Arabia as well too, and India. So what's holding all of the BRICS nations back, especially Russia, is sanctions. And now, look at this. Trump and Russian President Putin are agreeing to start negotiations immediately and will visit each other's nations. And Trump just posted this today. Elon Musk reshared this. He said, I just had a lengthy and highly productive call with President Vladimir Putin of Russia. We discussed Ukraine, the Middle East, energy, artificial intelligence, the power of the dollar, and various other subjects. We both reflected on the great history of our nations and the fact that we fought so successful in World War II, remembering that Russia lost tens of millions of people and we likewise lost so many. And here's the important part. We talked about the strengths of our nations and the great benefit that we will someday have in working together. But in order for that to happen, first, we have to stop millions of deaths taking place in the war with Russia and Ukraine. And Putin even said that is common sense. They both believe in very strongly in it. We agree to work together very closely, including visiting each other's nations. So this is exactly what we want to see, because rather than competing against each other and going to wars and doing all this nonsense, there needs to be collaboration. If you guys haven't read this book called The Science of Getting Rich by Wallace D. Wattles, it talks about how we are going from the competitive plane to the collaborative era, and collaboration is the key to success moving forward, because competition is how monopolies were created during the railway, gas, electricity, basically the Industrial Revolution, where you just couldn't compete with these guys because they dominated. And so now, because we are in the social media revolution, the Web3 revolution, the blockchain revolution, the technology revolution, well, collaboration is the key to success now. So Trump asked the Secretary of the State, Marco Rubio, Director of the CIA, National Security Advisor, and Ambassador and Special Envoy to lead the negotiations, which will be successful. Millions of people have died in the war. That would have not have happened if he was president, but it did happen, so it must end. No more lives should be lost. He then thanks President Putin for his time and effort with respect to this call, and ends it by saying, I believe this effort will lead to a successful conclusion, hopefully soon. So in order for Ripple to start doing business with Russia, the sanctions would need to end. So what would it take for the sanction on Russia to be lifted? Well, it's a very complex legal, political, and diplomatic process. And number one right here would be Ukraine. A resolution in the conflict in Ukraine, withdrawal of Russian forces, implementation of peace agreements, ceasefire and peace. Number two, compliance with international norms. Number three, diplomatic and legal actions. And then a few other things like policy changes, economic reforms, political will, multilateral consensus, and then most importantly, executive orders from Donald Trump. So it sounds like he wants to do that, as he clearly stated right here in this post he made today. Now, for Ripple and XRP to be successful, obviously they don't need Russia, but that's another stepping stone in the right direction for mass adoption, because the BRICS have been trying to undermine the US dollar by creating another currency, and now with Trump in office, we're seeing all these major shifts that are drastically going to affect the future of crypto. For example, Tom Emmer being appointed as vice chair of digital assets on the subcommittee for financial technology, artificial intelligence. Listen to what he just said.
Under President Trump, promises made are promises kept, and a new day for crypto innovation, opportunity, and excellence has finally arrived. Crypto technology shifts economic power from centralized institutions back into the hands of the people. It's transformational. The wrong leadership, our past administration, feared this transformation. They did everything they could to kill it. The right leadership, the Trump administration, welcomes this transformation and will do everything in their power to make the United States the crypto capital of the world. For this reason, we are in a moment to drive real change, to legally anchor the digital asset community, to unlock a peer-to-peer internet with an abundance of opportunity, to be globally competitive with our regulations, to expand the status of the dollar as the world's reserve currency, and to foster in the golden age of America. Doing this requires leading with two priorities. First, we must ensure crypto policy remains nonpartisan. Republicans and Democrats have a 10-year history of working productively together on solutions in this space. That kind of teamwork must remain the status quo. Second, we must craft statutory regulations that honor the core American values that are enshrined in digital asset technology: privacy, individual sovereignty, and free market competitiveness. I'm encouraged by the strong nonpartisan coalition of members on this subcommittee and this full committee who have put up American values at the forefront of crypto policymaking. This Congress, I look forward to supporting this subcommittee as its vice chair and drafting and passing stablecoin legislation and market structure legislation. I also look forward to passing the CBDC Anti-Surveillance State Act, which bans the government from ever creating a central bank digital currency, and the Blockchain Regulatory Certainty Act, which gives entrepreneurs the legal clarity they need to innovate right here in the U.S., and the Securities Clarity Act, which codifies in law that a token is separate and distinct from an investment contract. This committee has long been at the forefront of innovative policy making for the digital asset ecosystem. In this Congress, I'm excited to see the legislative products of our labor pass and get signed into law. Thank you again, Chairman Stile, Chairman Hill, and my colleagues across the aisle for your longstanding partnership in good faith to unlock an abundance of economic opportunity for our constituents. We have a lot of work ahead, but our constituents can trust that a great bipartisan team here in Congress will bring this across the finish line and deliver for the American people. Again, I'm honored to serve as your vice chairman, Mr. Stile, and I yield back the balance of my time.
Now, I absolutely love this guy because he did not let up on Gary Gensler. He has absolutely roasted him in the past. And so he is the perfect position, the perfect person for the role. But the real question remains, if they ban the creation of CBDCs, how will that affect Ripple and XRP? Because Ripple has developed and promoted their CBDC platform, which allows central banks to issue digital currencies using Ripple's technology. And this made Ripple and XRP the devil of the cryptocurrency industry and caused a lot of debate from people who didn't truly understand the level of 5D chess that Ripple is playing here. Because in my video yesterday, I brought up this post from NFA.crypto calling XRP a slave coin because CBDCs can be tokenized on it is a dumb argument that people were making, because every other type of asset can be tokenized on it as well. So it was like calling a field of grass a violent concussion battleground because it's possible to play football on it, when in reality, any sport can be played on it. Even picnics can happen on it. So because Ripple's technology and their utility can do so many different things, which I'm actually working on a document called XRP Lifespan to break down for you guys in the acronym for Lifespan, which is liquidity, interoperability, fiat bridge, ecosystem, speed, payments, accessibility, neutral asset, and all of the features and functions that would allow for XRP to be used by banks, payment service providers, global investment management firms, and other financial institutions, demonstrating its potential for a long and prosperous future outside of the creation of CBDCs. So if you guys want to see me break that down in another video, make sure you subscribe and you like this one and share this with a friend, because if CBDCs are banned, in my opinion, this would have little to no effect on XRP, because Ripple's CBDC platform itself does not directly require the use of XRP, and XRP would still find utility in other areas like remittances or as a liquidity solution for financial institutions through Ripple's XRapid product, which does use XRP. And also because XRP is ISO 20022 compliant, well, it's going to allow it to be able to communicate effectively with the new messaging standard that's going to be implemented globally by the end of this year, November. But look what's coming in the United States with the Fedwire Funds service. In a single day implementation strategy on March 10th, which is about 1 month from right now, they're going to be sunsetting their proprietary Fedwire application interface manual format and replacing all FAIM messages with the ISO 20022 messaging standard. And as you can see right here on SEC.gov, they've posted this up as well, saying new filing fee Fedwire payment format in Edgar, March 10th, 2025. They're going to retire the old messaging format March 9th, and they have a link right here for more information. And it directs me to frbservices.org. So this is extremely bullish because this is lining up perfectly with all of these ETFs that are being filed, guys. Look at this. The odds of an ETF approval in 2025 have now risen to 90% chance that the SEC will approve Grayscale's XRP spot ETF. Now, some people are saying as early as February 13th, which is tomorrow. Most likely not going to happen. But if that does, we would witness history. That'd be absolutely crazy. I'm not expecting that. But listen to what Brad Garlinghouse says, because he's confirming that institutional adoption starts with XRP ETFs.
There's been an influx of XRP ETF filings, both in and out of the US. How do you view all of this? How do you view these filings?
Well, I think part of the transition from maybe more speculative retail into more institutional adoption and participation is the ETF step. Certainly, the Bitcoin ETF getting approved, the SEC was dragged kicking and screaming a little bit towards that outcome. But getting the Bitcoin ETF, I think, was a monumental event in terms of expanding the ability for others to participate, particularly institutional investors. So to me, I think I said then publicly that people would ask me, is there going to be an XRP ETF? And I just look, it's inevitable that there will be an XRP ETF. And now I think I actually don't even know. I think there's 4 or 5 different filings here in the US. I know at least one in Europe. And, I think it's great. I think it's, again, not surprising. I certainly hope that we'll see some of those approved soon. And we'll see them trading so others can participate in the ecosystem that otherwise might not be able to because they don't want to custody crypto themselves or other reasons that may exist. But I'm excited for sure. And I think it's a great sign, not just for XRP, but I think it's a great sign for crypto broadly.
And according to the crypto lawyer Jeremy Hogan, he said it's much more likely the case is settled sooner than ETF approval. So these are the stepping stones. The lawsuit being settled, ETFs being approved because the green light is given with the SEC off Ripple's back. And then guess what happens next? BlackRock. If BlackRock files for an XRP ETF, the price of XRP will never be the same again, because look what BlackRock did to the price of Bitcoin, sending it over $100,000 with the ETF approval. So with XRP sitting at $2.45, now let's look at what the charts have to say, because technical analysis can be disconnected from fundamental analysis, but it's important that you guys have a good understanding fundamentally of what's happening in the space. So when you look at the charts, you know what you hold, regardless of long, boring, sideways consolidations or sell-offs, because you have a long-term perspective. So on the daily chart, the stochastic RSI is still below 20, with the K line at 19, the D line at 16, showing that the price of XRP is relatively oversold on the daily. Also, the relative strength index is at 40, coming back up to the RSI-based moving average. We're still obviously in a downtrend right here if we draw this descending resistance. And then on the MACD as well too, you guys can see that the MACD line is below the signal line and we are below the 0 line, showing oversold conditions. So this is actually a great sign on the macro for me to accumulate more XRP. Even if we see XRP's price see another shakeout event to the downside, eventually I would expect there to be a liquidity injection into XRP. And the major resistance that I'm watching here is up on the 2nd and the 3rd of December right here, which acted as support on the 19th of January and also support right here on the 29th of January. This is where I would expect the next resistance for XRP to be to the upside if we can hold this ascending support right now that we are bouncing off of currently since the 6th of February. You can see multiple points of contact right here. So what I would expect in the short term is a final liquidity flush of leveraged long traders to the downside, a quick flash, shakeout event, possibly back to $2, and then for XRP to make the move back into this resistance. This is where I would be setting my limit buy orders, and it would be coinciding. Again, I'm not telling you guys to buy XRP or sell XRP because these videos are not for financial advice. They're purely for education, informational purposes only. I'm just going to tell you what I'm looking at in the charts, what I see in terms of the data, and then what you choose to do is up to you. But if I were to draw right here from the 9th of December until the 30th of December right here as support, this is the zone that I would put some limit buy orders right here for XRP, anywhere between $2 and 12 cents all the way down to $1.99, $2, right within this range right here. Even $2.14. Because as you can see, this is a strong zone of demand with these massive wicks right here that got bought up by the bulls, keeping XRP's price above $2. And so if we see any market manipulation happen and we see a fake out right here on the stochastic RSI where the K line turns back around to the downside, sees a bearish cross below the D line, and we stay below 20 in oversold conditions for an extended period of time, and then the RSI has a final shakeout event, let's say here, down below 20, simultaneously, the MACD just stays below 0 for an extended period of time before we see a bullish cross to the upside, then that's when I would expect there to be a bounce for the relative strength index. I'd expect there to be a bounce for the stochastic RSI at some point. So we don't know exactly when that's going to happen. We just have to plan, prepare, and enter our limit buy orders. So this is the zone that I'm watching here as support for XRP because it would be the perfect time to shake out a lot of leverage long traders because they're looking at this ascending support right here on the price chart, thinking that XRP is just going to bounce to the upside from it, when this is the perfect time to have a shakeout, fake everybody out, then XRP's price sends it to the upside. I would expect something like that to take place. Now, if it doesn't, then I'm completely fine with it because I've already backed up the truck for XRP below 60 cents, even 50 cents, even at the bear market bottom during the 2 years that XRP was consolidating since 2022. So I'm not going to miss out on the bull run. But for me to accumulate more XRP, this is the zone of support that I'm watching. Now, there are other opportunities to make a lot of money in crypto the rest of this bull run if you missed XRP sub 50 cents. For example, our research team posted GOAT on the 13th of October of 2024 when it was right at a penny, and since then it rallied to over $1, 5,000%. That's like turning $1,000 into over $50,000. Our team called Pendle at only a $16 million market cap, or 16 cents, back on February 18th of 2023, all the way back here, and since then it's rallied up over 4,000%. That's a 40x. It's like turning $1,000 into over $40,000. Our team also called BitTensor Tau September 15th, 2022, before the token was ever even launched. And since then, Tau has rallied over 2,000%. That's a 20x. Our team even said Solana is most likely to be one of the easiest trades next year, and this was posted December 29th, 2022, on the day that Solana bottomed out at around $8. And since then, Solana looks like it's up over 2,500%. That's a 25x. It's like turning $1,000 into over $25,000. The list goes on and on and on. Our team called Sui, Ondo, and even some of the biggest cult-based meme coins like MOG back in July 20th of 2023, the day that MOG launched. So if you want to learn how our team is finding these altcoins before they explode, we just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University through the link below. And although we make no guarantees because crypto is definitely risky, guys, this is only $97 a month or $970 a year. If you want to save $194, getting 2 months for free and unlock some exclusive bonuses, just go through the link in the description below. Get in right now. Watch the 26-minute video covering everything that Altcoin Pro University offers to help you become the first millionaire in your family tree, if that's a goal of yours. And you can get started through the link in the description below right now, or you can go to bullrunners.com to take advantage of the bonuses we're giving you before they expire. Everyone is loving the community. They're loving the education. They're getting access to real-time altcoin picks first before we ever make videos about them. So click the link in the description below, watch the video, and I'll see you on the inside.